In today's episode, Wall Street announces we're in a new bull market thanks to the hype surrounding AI, even though corporate earnings continue to fall. SEC sues Binance. Apple reveals its new mixed reality headset. More liquidity could be coming out of the system. The Saudis cut oil production again. And important price action in the world's largest stock. Welcome back everybody to a new week on Wall Street. I hope you had a great weekend. My name's Jared and I'm going to run through you all the most important news, data and charts today. And stick with me right through to the end while I get you prepared for this week in trading. So it was a little mixed to start off the week here today. We did see some weakness in the banks on the news that regulators might be increasing capital requirements. Got a little bump up in crude after that news from the Saudis. However, that didn't help energy stocks. And we saw industrials come off a little bit as well, with healthcare and consumer cyclical holding up a bit better. And some significant down moves in the semis as well. Other news that caused the market to cool off a little bit here today was the ISM Services PMI, coming in a bit weaker than expected at 50.3, almost in contraction territory. The trend over the last couple of months, we've been seeing services hold up a lot better than manufacturing, which is already in contracting territory. However, we still have those global services and the composite PMI holding up a bit better. And it's going to be a bit of a quiet week in economic data here. The only thing we'll be really looking at for the rest of the week is the balance of trade on Wednesday and then the weekly jobless claims on Thursday. The market's still expecting the Fed to hold at their next meeting on June 14. However, remember we got the big CPI report a day before their meeting, and that will play big into their decision. Fear and greed index almost in extreme greed at 73, and a busy Monday in the options market, 37.5 million contracts traded, 55% of same old story in mega cap tech, especially Apple, only 31% puts. A lot of people loading into calls after their news of their new headset that came out. And once again, we're seeing these huge put activity in the high yield corporate bond ETF. Dark pool buyers still hanging in there at 49% on the DIX. And corporate insiders taking advantage of these elevated levels in the market, with their sales eclipsing purchases 189 to 112 on Friday. So just looking at the SP 500, we finished the day down a little bit at 42.73. And just looking at the weekly chart now, you can see the SP 500 is up 23% since we bottomed out in the middle of October last year. And that meets the generally accepted definition of a bull market on Wall Street. Whenever we climb more than 20% from the lows, a lot of people call it a bull market, and vice versa. When we fall 20% from highs, they call it a bear market. And that's why we're seeing a lot of these articles come out now, and a lot of people online as well are calling it the new bull market. And they're saying that's because of the decline in the VIX and really low volatility, which should be taken as a sign that the bull market is here. And it's true, typically low volatility is associated with bull markets, as typically when the market grinds higher, it does so with less swings than when it's going lower. And of course, we've got there on the back of the AI craze. So late last year, ChatGPT came out and really kicked off the start of the year and got stocks like NVDA and a few other semiconductors ripping up to new highs. But of course, we've seen all the gains in the top 7 largest stocks in the market. That's pretty much contributed to over 90% of the S&P 500's gains this year. And of course, Wall Street and the media are now pushing it as much as they ever have, with articles regularly like this: 3 stocks to buy for the AI revolution. So convincing a lot of people to get in at these elevated levels. However, in my opinion, I don't think we can call it a bull market just yet. So this is a 1-year chart of the S&P 500. And according to my eye, I see a sideways market, or what you could call a kangaroo market, one that hops up and down. Sure, we're approaching the top of the range, but the top of that range is 43.25. So it's still yet to be seen whether we take that out or not. And to me, in a bull market, I would say more appropriate definition would be, have we hit new all-time highs within the last year? And we haven't done that. So while we still could break out of this high from back in August last year, that's still yet to be seen, and there is still a lot of headwinds and risks in this market. And one of those big risks is we still have a recession in corporate earnings. And Morgan Stanley expects the S&P earnings per share will fall by 16% this year. And that will further push up the valuation on the stock market, especially to risk-free government bonds, which we still have the yields increasing on. Also, stay to the end of this video and I'm going to introduce you to my new S&P 500 oscillator indicator that I've been working on for a couple of months now, and which is now going to be the biggest input to help me decide my positioning. And it just actually flashed a sell signal on Friday. So stay tuned in for that and I'll explain that a bit more later on. And if you've been watching this channel, you know I've been saying for a while now that the US government and regulators are unofficially trying to shut down crypto in the States. And they've just taken another step in that direction today with the SEC suing Binance and its CEO CZ for violating securities regulation And basically the lawsuit accuses the world's biggest crypto exchange of operating an illegal exchange. And of course Binance is fighting back and pushing back on those claims. However, I think the government will get its way, and in the long run these cryptos exchanges are toast in the States anyway. And if you watched my videos last week, you know I shared with you I got short Coinbase at $62 a share for this exact reason, and we did see the stock fall 10% today on that news. And just a quick look at Coinbase on the charts here. It did come off quite a bit on more than double average volume at 26 million shares. And we're still at $58 a share, 13 billion market cap. I think this business is structurally broken and has huge headwinds. And we may see this thing trade around a shoe size, $10 a share, within the next 6 months or a year or so. Apple just came out with its first major product in almost 10 years. The Vision Pro, but for a huge price of $3.5 grand, which they announced at their Worldwide Developers Conference today. And while the product does sound awesome, the headset can be used to watch movies, including 3D, and allow users to see apps in a new way in the spaces around them. Users can use their eyes and hands to navigate through apps and search with their voices. That does sound pretty cool, but however, at $3.5 grand, that pretty much locks out most of the market. And more importantly, look at the price action in Apple shares. So huge volume day, more than double average volume at 121 million shares. And I'll just take you down to a 15-minute chart here. So we gapped up on the news. The market initially loved it. We traded up to just under 185 a share, which is an all-time high for Apple, and approaching that huge 3 trillion market cap. However, shortly after lunch, the market just sold off and sold off hard. So there was big sellers there waiting to take advantage of those elevated levels. And here's a look at the weekly chart. So you can see from those January lows, we've had a huge rip up, almost 50%. Without a big correction or pullback in that time, it's kind of gone parabolic. And we've just taken out those late 2021 highs. And often you'll see in the market will make a swing high, swing low, and just take out the previous swing high or swing low by a little bit. And we can see that here with this swing high here. We just took out this one by a little bit. Down here, we took out this one by a little bit. And again, down here in January, we took out the June one by a little bit. So potentially, this could be a bit of a top here in Apple, as if we've just taken out the 2021 highs by a little bit. And so just going back down to the daily chart, and this was on a big bearish engulfing candle formation as well. And we do have a little bit of a negative bearish divergence on our hidden divergence indicator. And just looking at our stock fair value indicator, it's got fair value at 120 a share. So currently almost overvalued by 50% here. And sometimes you'll see the market often turn after a big event. So it could be a case of buy the rumor, sell the news, as the market was getting excited going into this developers conference and the new product coming out. And we can see in the options market, a lot of people loaded into calls here today. However, this price action to me looks like a potential reversal or potential top here. And again, just look at that weekly chart. That's looking pretty extended to me. And obviously this stock, along with Microsoft, NVDA, and Tesla, has a huge effect on the NASDAQ, which has been ripping all year. And we are coming into a period of bearish seasonality over the next couple of months. So I do like Apple products. I do like the company. I think it's really well run. However, I don't own the stock at the moment, but if I did, I would be at least taking some profits up here. We've also got some other structural pressures building in the stock market, and one of them is the debt ceiling deal. So like this article says here, the effect of the end of the federal debt ceiling could be equivalent to another 25 basis point increase in the key Fed funds rate. And that could be bad for stocks because, like we've seen this year, excess liquidity injected into the financial system as a result of the Treasury running down its cash balance has helped provide fuel for the rally in tech stocks, as well as the hype around AI. However, now Congress has approved the deal, that liquidity flow is about to be reversed. So the Treasury is going to ramp up their sales of short-term bills to rebuild its cash balances, which drains liquidity from the market. And that's good for income investors, but less so for those chasing AI stocks. Another issue that could put downward pressure on liquidity is regulators responding to the Silicon Valley Bank situation, and they could very well raise the capital requirements in banks. And I wouldn't be surprised to see this come out, as the Fed and the government regulators need to be seen to be doing something to respond to these banking failures, and making the banks a bit more safe on the capital side is probably one of them. And the Saudis really want to see oil back up at $80 a barrel, where their target price is. And to get there, they pledged to cut another 1 million barrels a day in July. And they've kind of taken the lead on this one against OPEC and kind of against what Russia is doing as well by flooding the market with cheap oil. So the Saudis are the most influential group in the OPEC nation. So I'm betting they will get their way and we will get higher oil over the coming weeks and months. And just looking at the chart of crude here, we had a huge gap up this morning just above 75 a barrel, but then it got sold off viciously and pretty much finished where we closed on Friday. So it looks like short sellers are trying to have a go at this thing, but it's just hard to see much downside below the mid 60s here. We'd really have to see some more weakness come out of China and the Western economies as well with their crude consumption to really get down below that mid 60s level. Okay, back into the charts. Stick with me through to the end and I'll give you my final outlook on the market and how I'm positioned going into this week. We did see a little bit of a reversal of Friday's trend with tech finishing just a little bit up and the small mid caps and Russell 2000 coming off a little bit today. International stock indices all had a little bit of a pullback here today as well. A little bit of strange movement in volatility land. The new VIX one-day index actually dropped today to 10.5. So the market's saying it's going to be a real quiet day tomorrow. However, the VIX 9-day shot up 11% to 14. So the market expecting a little bit more volatility later in the week. And that's probably the market starting to price in the Fed meeting next Wednesday and the CPI report out on the Tuesday before. VIX still super low here, under 15. And even longer dated options 6 months out are trading pretty low, with the implied volatility on SPIX options 6 months out around 20. Put call ratio still low and the skew index still elevated 143. Short-term breadth still holding up with 59% of stocks above their 20-day average, bit under half of stocks above their long-term average, and new highs versus new lows still hanging in there a bit bullish, with the NASDAQ having 76 stocks reaching new highs today versus 27 new lows. Got the growth defensive spread still stalling out at these elevated levels. And we can see that in high beta, low volatility and growth versus value. And here's a spread I'll be watching closely this week, and that's the small caps versus large caps. The Russell versus SPY. So we had a pretty good price action movement here on Friday. Bit of a momentum thrust above the 50 on good volume. We've pulled back here today. I'll be looking for this spread to find support around this level and defend these levels. And if we just look at a weekly chart on the spread, you can see we are pretty low down here. Small caps have been underperforming large caps for over 2 years now. And the valuation gap between small caps and large caps is at historical highs as well, meaning small caps are pretty cheap relative to the large caps. Copper versus gold spread trying to find a bottom and get above its 50. And international stocks continue to trade weak, with European stocks versus American stocks finding new multi-month lows here today. Look, government bond yields just hanging in there, with the 2-year at 4.47, 10-year at 3.68. And as we get closer to next Wednesday's Fed meeting, there's the Fed funds futures contract in June just pulling back here. And the Fed very well may wait and see what the new Treasury bond issuance from the debt ceiling deal does to the market and just take a pause at this upcoming meeting. However, they may communicate to the market that they're not set on pausing. They're just going to pause for this month and keep reassessing and maybe go back to hiking next month. And that's kind of what it looks like the market's pricing in as well. So we've still got September contract higher at 525. However, the December is a bit lower at 504. Dollar hanging in there, but looks to be getting rejected off these 104 levels. And with that news that the SEC is going after Binance, Bitcoin did not like that at all, coming off pretty heavy here, down over 5% to just above 25,000 a coin, and finding new multi-month lows. Commodities doing their best to hang in there, and gold as well can't seem to make up its mind on what it wants to do. Uranium found high highs, high lows today and continues to push up on this volume burst. And the AI ETF bots actually found new highs for the year as well. Bit of life in the IPO sector coming up to new highs for the year. And one of the worst performing sectors today was semiconductors, down 1.25%, along with retail stocks, which had a bit of a pullback, and a few dark cloud cover formations in the energy stocks. Did see the defensive sector, healthcare, come up and tag its 50, and utilities as well. Got a bit of a move high before we pulled back in the afternoon. Tesla found new highs for the year. However, we're looking a bit stretched up here. We've got the 50-bar VWAP at 177 on a little bit of a spinning doji. The whole candle above our upper buy-sell band and a bit of a bearish divergence on our hidden divergence indicator. So I wouldn't be surprised to see Tesla have a bit of a pullback here over the next few days, week or so. And there's a quick look at NVDA calling up here just like the semiconductors ETF, and it looks like volatility and volume starting to dry up a little bit. So the market's a little undecided what it's going to do next here. There's Microsoft calling up at a big resistance zone on a negative divergence. Google looks a bit better holding on to its resistance zone, and Meta still on this tight parabolic uptrend, hasn't had a good pullback all year. Netflix looks to put in a bit of a shooting star inverted hammer formation at these overbought levels. Over to mean stops, and miraculously, we've still got GameStop trading well here. coming up to overbought levels at 24 a share, but they're reporting earnings in 2 days. Got a big move up in Unity Software here today, up 17% on huge volume. On news, the game developer will partner with Apple for its new Vision Pro headset product. Budweiser and Target still in trouble. Carl Icahn stock trying to defend this hammer bottom here, and the banks didn't like that news of potential increased capital requirements today. All coming off a little bit here, except for Schwab, which is holding on, defending itself, and not looking too bad. Okay, back to the main indices. And before I get into this, I'm going to show you my new indicator I've been working on. So this is what I call the SP500 oscillator. And while it looks pretty simple and just like the RSI, don't be fooled by its simplicity. I've actually been working on coding this thing for a few months now and trying to get in all the data I want into it so it can really help me determining what my positioning should be and kind of where the market's at. So a lot of data goes into this indicator. It's not just a price action of the index. And it's designed solely to be used on the SP 500 daily chart. And just like the RSI, can identify overbought and oversold levels, as well as divergences as well. And I've just added the RSI to the chart to give you a quick comparison. And you can see it's far superior to the RSI, as the RSI is usually a little bit early and really whippy all over the place, and is just looking at the price action of the index. However, out of all the freely available indicators I've studied over the past 20 years, I have found the RSI to actually being the best performing ones out of them all. Other good ones are the MECD, Bollinger Bands, and of course moving averages and VWAPs, things like that. However, for my new indicator, the SP500 oscillator, a lot of things go into it. A lot of the things that I cover in these daily videos. So the breadth, volatility, and other things like retail sentiment. I've got quite a lot of data going into this indicator. And basically we want to look at the levels of 60 and 40. So the indicator can oscillate between 0 and 100. However, you'll rarely see it go above 65, 70 or below 35. The market would have to be really oversold or overbought to get to those extreme levels. And so Friday we actually got a reading of just above 61. You can see the last time we got up to 61 was here at this level. Then back on February 2 it went above 60, absolutely nailed the top. And then the last time was back up around here and here as well. And vice versa with the bottom, it came down and nailed the bottom here on 13th of March. So whilst it's not perfect, just because we get to 60 doesn't mean the market's going to fall straight away. It does give a strong indication that the market is overbought on many points of data, and you can kind of think of it like a sentiment index as well. I was almost going to name it the S&P 500 Sentiment Index. However, I thought oscillator was more appropriate name. And so going forward, you're going to hear a lot about this indicator, as it's going to be the largest input into my decision making as to how I should be positioned in the market. And if you watch my channel, you know I'm generally a bit of a contrarian mean reversion trader. So this suits me perfectly for how I trade. And the S&P 500 oscillator indicator will be available to purchase on our website in about a week or two, along with a few other new indicators as well. And don't worry, if you have recently purchased our all indicator package, you will shortly in the next couple of days be getting this indicator and a few others of our new ones free of charge as well. As any new indicators we come out with and existing ones we update are always included for people that purchase our all indicator package. Okay, so back to the chart. So we got the S&P 500 oscillator at a 61 on Friday. Today it finished a little bit lower at 58.71. That's still elevated. And just back to our regular charts, we can see that the S&P 500 did put on a little bit of a spinning doji here at these overbought levels at the top of our buy-sell band. We got a little bit of bearish seasonality coming into the market this week, and of course this month and the next couple of months as well. So once again, I think the risk is to the downside. I think it's a good risk reward here, tilting short, and that's why today I increased my net short position from 40% to 60% net short in the portfolio. And I did add a bit more tech to the short side of my portfolio, with one of the names I shorted on the close being Cloudflare with the symbol NET. I think the stock is a bit technically stretched here in overbought levels on a resistance zone. And looking at our stock fair value indicator, I can see it's significantly overvalued by more than double, and we've got a negative business quality score on our indicator there as well. And I'm still long a bunch of small caps and value stocks, and I'm betting in the second half this year we see a bit of a comeback in the value growth spread. So that's how I'm currently positioned. Thanks for sticking with me right through to the end, and let's all have a good week out there. See you again tomorrow.